Welcome, everyone. This is Chris Temple, editor and publisher of the National Investor, back with you. And we're recording this after the close of the markets on Friday, August the 12th, 2022. Another rally week for the markets where, if you believe the propaganda coming from Washington generally, you think that we should be playing that old Franklin Roosevelt theme song, Happy Days Are Here Again. We've got zero inflation for the last month, according to the president. We had the Back Better Lite pass, which I'll get to in some greater detail a little farther along. We've seen the stock market get up pretty much to a place where some are saying a few more points, give or take, and we may have a more substantial breakout. In fact, I heard one commentator insist this week that we are back actually in a bull market for stocks because the NASDAQ is now 21% off of its low as of this week's close. So a lot of good stuff if you like Kool-Aid spiked with government propaganda, I guess you'd say. For the rest of us, we're going to dissect this and try and do it in a sober way. Now, I won't always be sarcastic, and see exactly where it is that we're going to be going. Now, first of all, I want to point out that this is, of course, part of what we do at the National Investor. Those of you who are on both my free list and my members list are able to watch this video. Not everything that comes out, of course, is free. Members pay me for my advice, and I'm going to get to some of that again in a little while as well. So a couple reminders, first of all, that I suggest you go to our website, nationalinvestor.com. If you're not already on my email list, sign up. If you are not a paid member and you want access to all of our recommendations on portfolio allocation, when to zig and when to zag in different areas like the stock market generally, energy, gold, what have you, you can sign up for a paid membership there as well. Now, recently I put the first part of our, what usually is for our members, issue, and I do this from time to time when I talk about general subjects. I put that on the website. It's the cover question and answer, which went on for several pages actually, from the first issue for August. I suggest you check that out because it goes into considerably more detail than I'm going to go into today on a lot of the moving parts that will ultimately answer the question, are we back in a bull market? Is this still a bear market rally which could be over? You know, I talk about a lot of different things, including what still, in my view at least, is the least covered and one of the more important stories in the financial press, and that is China, which has had growing unrest, bank runs, riots in the streets, and where now the biggest real estate company on the planet, Evergrande, is looking as it's going to go from a marketized default that is under at least some control by the central authorities in China to just a plain default. So be aware that that's looming out there, besides a lot of other things. You know, in looking at the stock market, and I want to throw this up now also real quick. It's from Sven Henrich. He's goes under the moniker Northman Trader on Twitter. He's one of a few people out who have put this chart or something similar to it recently, showing that indeed the S&P 500 is at a critical juncture right now. We could go beyond the typical 50% retracement of the initial top to bottom decline of this first leg of this bear market, which I believe we are very much still in. People will find that out to their detriment or scorn or peril or whatever, somewhere's not too far down the road. We could overshoot this. It depends on a lot of things. As I said on another week-ending thing that I do every week with Mickey Fulp, the mercenary geologist, we post that on kitco.com and elsewhere. Our Metals, Money, and Markets Weekly, I pointed out, among other things, that in about a week and a half from now, we're going to have the Fed and the other central bankers from the world meet at their summer picnic out in Jackson, Wyoming, and they're trying to, the theme, I don't have it in front of me right now, but I mentioned it when we did our show, Mickey and I, at the end of the day, right after the markets closed Friday. And they're kind of teasing us with a Rorschach test. We'll find out what the truth is when we get to their meeting, which is August 25th through 27th. But a lot of things bear watching, as I pointed out, not the least of which is the U.S. dollar, which with yet more news in the last week that should have broken the dollar out of its uptrend. The dollar bent, but it still has not broken. And that, to me, is going to be still one of the things at the top of my list to watch, along with China, along with Europe's credit markets, and so forth. But anyway, let's move on. I want to get to this issue of inflation. And of course, the president stirred a lot of controversy this week when the CPI number for July came out, showing no change month to month. Of course, that's still a drop of the 9+% year over year number that we had for the CPI last month. We're now down to 8.5%. And here again, you hear some people talk about it. And instead of not that many months back when we were getting up to 8.5% and everybody was just upset and wondering if this is going to be worse than the 1970s and early 1980s and so forth, here we are today, everybody cracking champagne corks, or popping champagne corks, I should say, over this 8.5% number. And of course, you know, that is something we all know is not true. We all know it's not true for a variety of reasons, not the least of which are all of our own real life experiences and things that we spend money on every single day. John Williams, who famously has a portal called Shadow Stats, he has been one of the ones leading the cause of trying to get people to get their heads out of their posterior orifices and realize that the numbers have been so fudged in recent years by the Bureau of Lying Statistics that if we counted inflation the same way we did the last time we had our run of double-digit inflation, we wouldn't be at 8 or 9%. We sure as heck wouldn't be at 0. We'd be up in the mid-teens as far as inflation is concerned. An awful lot of things are undercounted these days in what we use. So if you look at this chart now of all items, there's a couple that stand out that I'm going to get to later on when we talk about this Build Back Better Lite that was just passed and some of the structural things that are still out there. But understand that there are still two major elements of price increases for the average person that have not been accounted for nearly enough. One is what is called owner equivalent rent. We have seen rents go up to sky high. And even though real estate prices in some areas are rolling over in the recent past, we still have a situation where rent remains near an all-time high. Housing is very unaffordable and in some areas still unachievable for the average person. We do have, and I'm going to be addressing this in the not too distant future because I've been asked about what we should be doing to maybe look beyond whatever this tightening is going to be, the continuing bear market and so forth, to how we invest in housing when the next reflation comes. And one of the themes, of course, I'll be talking about is affordable housing, which may be turn out to be launched in the form of a massive government rather than private sector program. We'll see what happens. There's going to be a lot of moving parts to that. But anyway, housing is one thing that is very much undercounted in the inflation numbers. A lot of people this week were pushing back on food. If all you do is go to the grocery store, you've still got strong double-digit inflation. The big one that is the next shoe to drop, both for the inflation statistics as well as for the new energy crisis, which we've only now seen the first wave of, with gasoline prices going up over $5. They've now softened. The national average dipped under 4 in recent days. We may not go back to 5, but we're unlikely to go much lower either anytime real soon. And I'll get to that again later on when we talk about energy and the whole Build Back Better Lite thing. But the biggie is electricity costs. This is something that a lot of people are only now starting to feel, with the delayed reaction from a much higher threshold for natural gas prices, under the guise of allegedly trying to, quote, help Ukraine and help the rest of Europe. The United States of America has completely thrown away a world-leading supply and cost structure that gave us the lowest utility costs of any developed economy on the planet. And I hope those folks of you out there who still blindly believe everything the war party tells you, still keep your Ukraine flags on your Facebook page and wave the flags and talk about what a monster Vladimir Putin is and all the rest of this stuff. Wave those flags, post those flags when this coming winter you're paying 3 or 4 or 5 times to heat your home that you did last winter. That's something that is still coming, and it's one of the big reasons why inflation is by no means dead and buried. We're going to see much higher inflation than we've been used to for the last generation persist for a while. We will get help in some areas. Gasoline prices have probably peaked for a while. Not that they're going to come down a whole lot more. The big one, of course, like Walmart announced recently, is that retailers are choking on excess inventories of apparel and all kinds of consumer non-durables and so forth. They're going to have to discount those things to move them out the door to compound their problems. You've got back to school underway, that kind of shopping. You've got the holidays coming up, culminating in the Christmas shopping season. And I would not want to be in management of a retailer right now trying to figure out how to keep things from going from bad to worse financially for my company with what they're facing. So I think that what's also going to complicate that too is that after finally taking those belated vacations this year, I think the average family that's been cooped up for the last couple of summers came to the conclusion, you can't blame them, that we don't care if gas is $105 a gallon, we're going this summer, since now Dr. Fauci is not making us stay home. So everybody has spent the money on vacations. The highways have been busy in much of the country. The airports have been full in much of the country. I just read a thing. Of course, I'm up in Wisconsin for the balance of the summer, but I just read an item about from back home at Port Canaveral that they've got the best traffic that they've seen for cruise ships in a long time. So everybody's still spending a lot of money. I think that by the time we get to the end of this year and early next year, the trajectory of things right now, we are going to see a much bigger and broader slowdown in what consumers are spending. And of course, that's going to get people off of this happy days are here again attitude that we've had in recent days because of some massage statistics. And we'll be right back to talking about just how bad is the stagflation going to be and how many years are we going to be dealing with it. Now, this week, let's move on to that bill. Of course, the president with his Build Back Better Lite program is going to be able to sign this next week after the House passed it at week's end this past week. He'll take his big victory lap for all of that and tell us about how, this is the equivalent of curing cancer, stopping global warming, and the heartbreak of psoriasis and all the rest of these things. There are reasons why these got all Democrat votes and no Republican votes, some of which, yes, is partisanship, because there are a few good items that I'll get to in this. But by and large, this thing that they call the Inflation Reduction Act that, just like Biden was cheering about 0% inflation and they told him to shut up. And so that quickly went away because that was going over like, passing gas in church for the average American who knows inflation's not 0%. So too did they change, as you saw on the screen a minute ago, this bill to now something that's more about tax and climate change and that kind of thing. And look, we do live in a deeply divided country. It's very partisan. Neither side tells the truth all the time, maybe not most of the time. They all massage things the way they want to massage things. So we've got to take these things with a grain of salt, and that's why I like to step in at times like this and bring some truth and sobriety and some common sense to these things and see just, what is the truth? What are we looking at here? So look, there's been a lot of excitement over this, as a lot of you saw and as our members enjoyed this in recent days, especially at the end of the week. Friday alone, there was a half a dozen or so of our individual recommendations that were up 10% or more just on Friday when the House passed this bill. Or in anticipation, maybe partly as the House passed this bill. And pretty much all of them had to do with lithium battery metals, a couple of end users, one really cool story of electric boats on our recommended list. Everybody had big days. Some of that is going to be substantive long term. I still wonder near term if we see a major market or financial accident in Europe or China, as I've been warning. It may not be such a good situation for a while. We may see more weakness in stocks and commodities before we get to a sustained move up. That still remains to be seen. But look, this was a great, and I want to talk about a couple aspects of this. This is by no means an exhaustive exposition on this. There's a lot of things that, just like the original Biden plan of the whole Build Back Better thing, this is, maybe one part something good and substantive that will actually help the economy, and 9 parts, liberal, progressive, wish list, economically illiterate, prognostications. I mean, the one of the sad things we have these days, and it's not just Democrats, but they're the ones driving this bus right now, so we'll pick on them. Here again, so many examples in this bill that we could go on all day about how people with no real world economic and business experience are setting policy with utterly no idea what they're doing, except it sounds good, and they think it's going to sell to their base of voters. So one subject I want to talk about quickly first is the whole idea of the electric vehicle subsidies, the green economy. This has been a dream that everybody's had for a while. Look, as you see here, President Biden, when he was running for office, among other things, promised that he would be supportive of 2 chiefly. This one mentions more the Twin Metals project in northeast Minnesota, where I will be at a symposium with them on the 25th of August coming up in Ely, Minnesota. But he promised these people when he was running for president that he would be supportive of Twin Metals and then, of course, PolyMet's NorthMet project, the 2 biggest development stage or development ready, in Twin's case, battery metals deposits in this country. And he takes office and he allows the EPA to pretty much completely stymie PolyMet. And then the Interior Department, I believe it was, is the one who pulled the plug on Twin Metals. And so they've had now their permits revoked. It won't stay that way forever, but it is that way now. So, this is, I quipped in an article I wrote for the Epic Times earlier this year. This is the equivalent of President Biden being, Pharaoh here, as you see. And he's telling everybody that, well, I want my tally of electric vehicles, but you can't have your battery metals to make them. Well, what good is that? Frankly, the still smug United States of America, and this started under Trump for in some areas as well with the energy economy. We think that we are going to continue for as far as the eye can see to command because of our greatness and benevolence and how we're so wonderful and the greatest country on earth and our you-know-what doesn't stink and the rest of this stuff. We're going to still be able to get battery metals anywhere we want them. All right, well, China might rethink that. Russia has already rethought that, because of this proxy war we're in with them. And who knows what else is coming. China, even today, is still making inroads into South America, where we should be running the show, not China, a would-be re-emerging empire from the other side of the planet. So look, this whole idea that this bill is friendly to building electric vehicles is at best only partly true. If you are a, quote, ally of the U.S., as the U.S. defines that, we are going to favor getting battery metals for our emerging, painfully slowly emerging electric vehicle supply chain from other countries for as long as at least that lasts. One of the things, and I mentioned this when Mickey Fulp and I a week ago on our Metals, Money, and Markets Weekly were talking about this, the thing that most surprised me about Joe Manchin giving in on this thing and agreeing to support this bill was that it actually, in the case of the EPA, gives them even more power to slow down or stop projects within our own four walls. It's a bad thing. We don't need to have this. And among other things, folks, and look, if you're a good battery metals or base metals project in Canada, this is good for you, what the U.S. government has passed and what the president will sign this coming week. If you're in Mexico, if you're in South America, if you're in Australia, just about any place. But there's still this bias against development in our own country. And as I've said a million times, we will be paying for that. There will come a point when we still don't have nearly the metals and minerals that we need to be able to build a green economy. And if in fact the risk is increasing every day, that it's going to be like things are turning out with Russia, where we'll be shut off. Next it'll be China if we keep poking a stick in their eye over Taiwan and other things as well. So look, earlier this year, and you'll find this on my YouTube channel, I did a couple of interviews with Martin Turenne. He's the CEO of FPX Nickel. They're a nickel exploration company. They got a big project, unique one, in British Columbia. They're a recommendation of mine in the National Investor. And he and I were talking about this whole subsidy idea. And here's what, frankly, the government accomplishes with what they've done with this subsidy. And for all the talk about this was supposed to be an Inflation Reduction Act, well, here's part of the consequences of this, as you see on the screen. Ford just announced that they're going to raise the price of an electric F-150 pickup, the one that Sleepy Joe was, with his aviator glasses and all, was behind the wheel of, trying to show that he's the next best thing to, now he's a political Henry Ford. He's going to give us all of these kind of things, right? Well, look, when you still are stymieing the initial part of the supply chain that will give Ford or anybody else the amount of raw materials and battery metals and so forth that needs to do these things, what's the outcome? The outcome is that what limited supplies are still out there, there's more bidding for those and the price goes higher. So when the government, thinking that it's solving this whole issue of making people get electric vehicles, simply gives you tax subsidy for them, they've not done anything about supply, nothing about cost, nothing about supply chains. They're just throwing this out there to make it look like they're going to make this happen. And so the limited supply of stuff out there now will, all else being equal, go higher in order for these vehicle makers to have at least some of the raw materials for people who qualify for this tax break. It'd be so much smarter if the government would change its anti-development attitude in our country and stop being so hypocritical in wanting to get resources from others. I mean, I just gotta digress here for 1 second. Here's a couple of slides that I used in a very long, the longest I've ever authored, issue of the National Investor late last year that was about the green issue, energy broadly, and so forth. We've got these do-gooders that are all against development and so forth, but they don't care if some little 8 and 10-year-old kids in the Congo are up to mud and chemicals up to their armpits to produce the battery metals that they want. So these people, in a very real way, folks, are exploiting foreign, non-white labor so that they can get battery metals to make themselves feel good, all while keeping things shut down in this country, where we could produce these same things with first world working conditions, first world wages, first world environmental standards, etc. It's just loony. So what they've done in the end, and I won't belabor this anymore, is exactly what happened when we were given Obamacare. All right, we've got obscenely so the highest costs in the world for healthcare in the United States of America. And instead of doing what needed to be done to bring those costs down more, all that happened was you pushed the burden for those continuing high costs from individuals and insurance companies to the public ever bloated balance sheet. So you basically subsidized a bad situation that was already out there now. And this is what they've done with these electric vehicle subsidies. So sounds good, but in the end, it's a net negative until we at least get the supply chains to make sure that we bring the costs down, which is a better way of doing things in the end, folks, for these electric vehicles than what we've seen so far. So there are a lot of investment themes. Like I said, a lot of our recommended stocks moved hugely this last week. Some, just with sympathy to this whole thing, not completely unwarranted, because there is going to be, for the coming years, a big move in a lot of these battery metal stocks and everything that's going to, quote, green our planet. It's just that it's being done in a very slipshod manner. And again, when you talk specifically about our security and our own domestic economy here in the U.S., there's more negatives than positives in this thing. The other thing I do want to bring up, though, to kind of end on a positive tone, is that the one element of the green economy transition, whatever you want to call it, that everybody seems to be getting right, thankfully, to one extent or another, is on nuclear energy. And those of you who follow a lot of different uranium companies, of course, we've had enormous gains since the bottom 2 or so years ago in the uranium stocks, and in some of these others, these gains have reaccelerated recently after a sharp pullback back a few months ago. At least with that area, the U.S. is getting its act together and making sure that we start to reinvigorate our domestic industry so as not to be buying uranium, and especially enriched uranium for power plants from Russia. There's a number of provisions in this bill that was just passed that will enable that. And so even more so than with the lithium and some other battery metal stocks, it was very appropriate to see the rally that we had this last week. I said a while back, before this all really started getting underway, and I want to close quick with this cartoon here. Years ago, when I was trying to give people an idea of how to properly invest in the gold sector, I pointed out that it doesn't matter what the typical carnival huckster who's leading gold bugs around, tickling their ears. It doesn't matter what they say. What matters is what generalist investors think about gold, because from time to time, when the broad markets realize that they should be in gold, that's where your big moves from, not because your gold guru incessantly is saying that gold's going to 5 or 10,000 an ounce. And the analogy that I would use would be that when gold finally does get a move from time to time, historically, it's like a 300-pound man jumping into a kiddie-sized wading pool. Well, what I said about the uranium stock specifically, and this can apply to a lot of the battery metal stocks as well, is that when generalist investors finally have this light bulb go off over their head, it's like an elephant jumping into a kiddie-sized wading pool. And folks, you can look at all the stock charts about, you've had some 8 and 10 baggers in some cases where uranium stocks specifically are concerned over the last 2 years or so. In my opinion, that is nothing compared to what is coming. This is going to be a multi-year boom. And again, even though a lot of the developed nations, Europe, the U.S., Canada, thankfully for them, to a much lesser extent, because they get this a bit better. They have a resource-based economy. But where a lot of other things have been screwed up, everybody is singing from the same song sheet globally on nuclear energy. And of course, uranium stocks are going to benefit from that, as well as the makers of the different components for the modern nuclear energy industry. So it's a great story. The astonishing thing to me, even still, is that by and large, you can tune in Fox Business, CNBC, some of these other ones every day. You'll hear talk about gold, you'll hear talk about battery metals almost daily, you'll certainly hear talk about energy almost daily, but uranium as an investing theme has still been covered relatively little by all of these things. So we haven't even got to the point yet, notwithstanding the big gains that a lot of these stocks in this space have had over the last 2 years or so. We're not even at the place yet where the average investor even understands what's going on, and more so what to do about it. And when that comes is when you're really going to get those vertical spikes, I think, in a lot of these stocks. So anyway, that's what I wanted to share for today. Come back again. Look, the best way to keep in touch with me, folks, if you like these video updates and tirades, whatever you want to call them, in particular, is to make sure that you, of course, like this video, I hope, and subscribe to my YouTube channel here so that you never have any questions about when something new is posted. And again, for a lot more homework on the broad markets and why I think that we still have stagflation ahead of us for many years to come, why there are still a lot of dangers out there, and why we are not in a new bull market for stocks, you need to go to my website, read the comments, very detailed on that subject that I just posted from our first regular issue for August. The next regular issue for August will be going out to our paid members before too many days are up. So thank you for tuning in, and we'll see you again next time.